President Biden going after big oil once again, responding to Exxon CEO Darren Woods' comments on investor payouts, tweeting earlier today, "Can't believe I have to say this, but giving profits to shareholders is not the same as bringing prices down for American families." We want to bring in Rick Newman for a little bit more on this. And Rick, we know Exxon reporting another record profit this morning. President Biden has been very critical of some of the bigger oil companies over the last several months, and once again, doubling down on his criticism.
Right. And he said this in response to ExxonMobil CEO Darren Woods, who said in a prepared statement, I'm surprised this was in a prepared statement, but he said, I'm paraphrasing, well, we are giving back to the American people. We're raising our dividend this quarter. And they did raise their dividend from 88 cents a share to 91 cents a share. So their dividend, I believe, is the second highest in the S&P 500. But of course, Biden's point is, well, that's great for Exxon shareholders. What about everybody who's not an Exxon shareholder? So I guess Exxon thinks everybody should go out and buy a share or two of Exxon. It's about $115 a share right now. And Biden says, no, instead of raising the dividend, what you should be doing is cutting prices so people can save money at the pump. But look, these are cheap shots on both sides. Companies like Exxon, they're not going to cut their prices below market price just because they get political pressure to do so. And I would point out that there are a lot of other really profitable companies, and you hardly ever hear President Biden saying that Apple should cut the price of an iPhone because communications are too expensive or anything like that. So I think in the oil and gas industry, they're used to being an easy target. And I think it's fair to say Exxon is not going to cut its prices below market prices. It's going to keep doing what it's been doing for decades, which is returning that money to shareholders.
You know, I think it's another profound example, Rick, of just how big a megaphone Twitter is, and that Elon has some opportunities there if he can monetize that. But anyway, gas price is certainly a political football, as is the U.S. debt ceiling, which may be back on the hot burner pending results of the midterms. What lies ahead?
The debt ceiling is going to have to be raised again, probably sometime in the middle of 2023. And Kevin McCarthy, who would probably become Speaker of the House if Republicans do take control of the House as expected, he has suggested Republicans are going to return to their old tricks on the debt ceiling, which is when they do have the power to obstruct budget bills in Congress, to hold up extending the debt limits while they dicker over some other priority, which would be cutting government spending, or could be doing something about the soaring cost of Medicare and Social Security. So this raises the specter that we could once again go back to the days of debt ceiling showdowns, where everybody's fretting over what will happen if the Treasury can't pay the government's bills and all this kind of stuff. That could happen, but there is another thing that could happen, which is if the Republicans do win on November 8th, then there could be some kind of bill in the lame duck session, which is between November 8th and when the new Congress comes in at the beginning of January, that would raise the debt ceiling, preempting that kind of fight. And there have been a couple of serious economists who say what Congress should do is just raise the debt ceiling to $100 trillion. In other words, just make it irrelevant. Some people want to get rid of the whole thing. So, we'll have some really entertaining politics in 2023, Dave.
Oh, boy, entertaining, if you want to call it that. All right, senior columnist Rick Newman, I'll see you on the golf course tomorrow, sir.
Good, man.
Thank you.
Bye.